Right, good morning everyone as we head into European trade on Thursday the 30th of November, the last day of the penultimate month of 2023. See, Goldilocks meets Santa as global stocks powered the best month in 3 years. Best month for stock indexes since the vaccine-driven headlines at the back end of 2020. It's up solid percentages, nearly double-digit percentages across some of them. So, is that likely to continue into month end? You saw yesterday heavy selling of. I say heavy selling is that heavy selling, but still selling of stock indexes yesterday. Probably a bit of profit taking into month end. I mean, they've made a substantial chunk of profits, stock traders over the course of this month so far. So I don't really see much of a reason, kind of by news flow or any of that sort of stuff, for a legitimate move lower. I mean, you had yesterday GDP prints higher than expected, but it's a backwards looking indicator. Is that enough to cause a massive sell off in equities? I don't think so, given the day before you had had Christopher Waller, a member of the Fed, suggesting that rate cuts were on the cards next year. So the fact he's even talking about rate cuts next year did send stocks higher, and then they were sold back into. So a bit of profit taking, you'd have to imagine, across that. So is there likely to be sustained selling? I would suggest probably not. Maybe today, yes, but as you start to get through today into tomorrow and into next week, dips, you'd have to imagine, will probably be bought. But inflation today will give us a further clue, but especially a miss on inflation. Inflation comes in 0%. Probably keep stocks supported, probably through to the next Fed meeting, and probably throughout the rest of the year. So we'll see how that plays out a little bit later on today. But dollar stays near 3-month low. Focus on inflation data. So again, the focus is on the inflation data later on. But the dollar's pushing higher at the moment. The euro dollar's getting whacked at a bit of weak inflation from Europe yesterday, which maybe is a potential reason for that. But ultimately, I was reading a report yesterday about a bunch of investment banks to think heavy dollar selling into month end, but I mean, I suppose you could just release that report, trap some traders, and go the other way, couldn't you? Stock indexes slightly higher across the board, bit of a pullback or a bit of a bounce back from the move lower yesterday. See month-to-date percentage change though, double digits for the Nasdaq, 8.4 for the S&P, 7.5 for the Dow Jones, 8.4. Nearly similar gains for the Russell and the S&P as well. The DAX up 9%. The Euro stock 7.6. The stock 600. 5.75, the CAC around 5.47, the IBEX in Spain over 11.5%, so Nikkei 8.6%, so just solid gains across stock indexes over the course of this week. And even the Nasdaq's up 40% year to date, nearly 15% on the S&P. So it tells you that long stocks in a lot of environments does prove decent results most years. So apart from that, things are relatively mixed. US dollar pushing higher at the moment, lower overnight. So this maybe a bit confusing once you look at that. But global bonds are a bit mixed. Even US bonds, 2 years up, 10 years down, a bit mixed across the board. So the Australian dollar, Kiwi dollar, like we've been speaking, probably likely to remain somewhat supported, albeit slightly negative Chinese data this morning, but not that negative. But cross that bridge when we come to it with the calendar. Euro lower, weakest currency on the day. I have to imagine that is because of weak German or weak Eurozone inflation. Over the course of yesterday, you had Spain, you had Germany, you have France this morning, which is a bit negative. So again, inflation coming down across Europe, which again reduces the need for the ECB to go and hike interest rates again. And you can see this in through here. You got inflation from France. We don't really have a consensus on this calendar here, but previous 4% trading economics forecast is 3.7, and you come in actually at 3.4. GDP in France consensus 0.1%. Final quarter-over-quarter figure for France minus 0.1%. So one more quarter, there's a technical recession for you, as you can see. You need 2 consecutive quarters to consider it a technical recession, but monthly inflation rate minus 2%. You saw the same thing for yesterday, the monthly inflation rate minus 0.4%. The monthly inflation rate for Spain minus 0.4%. So disinflation, not just inflation cooling down, disinflation across Europe, which reduces the need for the central bank to continue to hike interest rates. You see month over month figure. I'll be interested to see this from Europe. Does this print negatively as well? That is a positive for people in the cost of living, trying to get prices down. It means the central bank nearly guaranteed to not hike rates again, no matter what they say. That's probably what you'd be looking for from the Fed as well. I mean, especially if that comes in, disinflation, that would be an interesting print all the same if it did, but we'll cross that bridge when it comes to it a little bit later on today. So you can see markets across the board. Dollar's a bit choppy, but euro dollar moving lower this week, your Aussie moving lower this apart from overnight, but cable sideways, Kiwi not doing too much, dollar Swiss lower, dollar CAD's all over the place, dollar yen was lower, then higher, then back lower. Pretty choppy week. Ultimately a bit of US dollar strength once you look at the euro dollar, kind of back out, kind of Tuesday, Wednesday, Thursday so far, but pretty choppy across FX, pretty choppy across everything. I mean, you can see the S&P 500 has chopped sideways to begin the week and pushed higher on Wednesday, obviously yesterday, and then sold back into it yesterday. Same thing with the Dow Jones, the Nasdaq, the Russell, bit all over the place. Your direction's kind of coming from the German stock index or European stock indexes. Rate cuts are probably closer within Europe, so that's probably why European stocks are having a good time. But I'll be kind of saying that for a few weeks. Europe are probably closer to interest rate cuts than the US, and also interest rates are lower in the Eurozone, so it does make European stocks attractive from a medium-term point of view, does it? To get disinflation and a recession, maybe not, but that's always why stocks are a little bit tricky in some respects. But Saudi Arabia pondering about increasing production cuts. They want OPEC to increase production cuts, whether that's extend production cuts or cut further, and then probably extend that as well. So that's a bit of reason for oil upside over the course of this week. Gold just in line with that, dollar weakness in line with yields pushing lower. That pushes gold higher, and you'd have to imagine gold's probably set for another leg higher. The fact that it's just hanging out up here at these highs means the asset is happy, comfortable to trade up at these highs. Therefore, you'd probably expect another push higher at some point. Do you need yields to continue their move lower to get gold pushing higher? I mean, certainly if yields do continue their move, gold should in theory push higher. But inflation today, main focus of attention. You do have a speech from Christine Lagarde at 1:30 as well, but all eyes will be on inflation at 1:30 today, the Fed's preferred metric of inflation. That comes in a consensus. It's kind of boring. If that misses consensus, it comes in at 0 or even minus 0.1. It should be solid moves lower on the US dollar, potentially some moves higher on stock indexes as well. So again, bias from the last few weeks probably remains the same, regardless of a bit of choppiness this week. Can't keep going lower forever. Stocks can't keep going higher forever. Do have to have pullbacks at some point, but there are other opportunities to trade. So we'll have a look at CPI a little bit later on. Not CPI, PCE a little bit later on. Cross that bridge when it comes to it. Markets might be a little bit quiet from now up until then. But certainly if that misses consensus, should give us some good trading opportunities this afternoon.